Jerry Webman, why did you title your book Money Shift? It's a very catchy title. Are you trying to coin a phrase here?
Well, I'm glad you like it. It is a great title, and it captures what we're trying to talk about. We're trying to say that the old habits about where money was made and how investors can capture some of that money being made has shifted. It's someplace else. It's among different people. The geography's changed. The analysis has changed. It shifted. Investors need to shift with it.
Well, in the book, you advocate shifting money to emerging markets. Which ones do you think are the best for people to move their money into?
Well, I'd answer that question a little differently, Greg. I think it's not a question of where, it's a question of what. So emerging markets, I talk a lot about them, the demographics, the technological innovations, very important. But what you want to ask yourself is who's making money from those emerging markets? Because the companies that are making money from those emerging markets, or the new consumers, the new middle class in those emerging markets, they're not necessarily companies that are located where those new consumers are. Some are, some aren't. Investors have to look in both places.
And you're not just talking about stocks, you're talking about emerging market debt as well. So investors should also put a portion of their portfolios into emerging market debt, right?
Well, people should do what their own needs and aspirations tell them to do. But one of the things that struck me, I was really struck by this. Looked at a chart not long ago where we arrayed countries by how much debt they have outstanding and how bad their budget deficit is, because almost nobody's got a surplus. You know who's best on those charts? They're the countries that we tended to think of as financial basket cases. Brazil, Mexico, India, Indonesia. They're the guys who look like
they're our creditors now.
They are our creditors, and their credit, just on that one metric, looks pretty good. So something people should really be thinking about in their portfolios.
What about shifting your money into alternative assets like hedge funds and gold? Is that a smart place as well?
Well, first you've got to ask yourself, alternatives to what? Because ultimately, money is going to be made because corporations generate economic value and investors get to come along for the ride if they're wise about doing it. There are things that maybe some commodity positions can do if people are concerned about inflation in the future. There may be some other kinds of alternatives in real estate, generating real estate and the like. And I talk a lot about that in the book, about how to think about that in your portfolio. Not like these are standalone great ideas, but you've got to think about them as you build for your own financial future.
And what about good old American stocks, the S&P 500, Dow stocks? Where do they fit into this brand new world that you're describing?
One of the most remarkable things over the last couple of years, as we've been through some really slow growth and tough economic times, is how successful but not all of them, but many American firms have been at making money in a tough environment. They've learned to be more efficient. They've learned where they should put production. They found new markets in the kinds of parts of the world we're talking about. So many of the best companies in the world you're always going to find are probably going to be headquartered in the US of A. But again, don't look at where the headquarters are. Look where the customers are. Look where the production is, and ask who's in a position to make money that way.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to